Crypto markets tumble as Trump reignites trade tensions with China, triggering nearly 20 billion in liquidations in leveraged positions. Volatility pops and put skew explodes, particularly in Ethereum, as altcoins see massive drops. Is it time to buy the dip yet? Find out in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT in the studio. Today's special guest is Friedrich Herzog, Head of Research and Portfolio Manager at Matrixport. Welcome, man.
Thank you, man. Thanks for being here.
Yeah, good to have you on.
Good to have you on. All right, so before we kick into the macro, because I know you've got a lot to say about macro as well, why don't you tell us a little bit about your journey into crypto and what you're doing over there at Matrixport?
Yeah, for sure. I mean, like, I guess many of you guessed, my background is coming from like the traditional finance world, right? So I started my career after grad school on the buy side, trading systematic equities, or systematic macro really. And from there went on to Goldman, where I was a PM for multi-asset portfolios. So more discretionary actually, so much more macro discretionary focused, a little less quantity at that point in time. And I really always was curious about, when I first learned about crypto, which was fairly late for crypto, natives in 2016, 17, I was a little skeptical at the time, right? I hate to admit that today, but
I think I found out about it in 2011 and I thought it was only for money laundering.
Right. Right. But I was curious about it. I liked it a lot. It was interesting, and then kind of caught the bug in 17, 18 and just kept looking at it, kept investing a little bit at the time.
What, in your PA?
In my PA, exactly. And of course, trained in traditional finance, you take a risk-managed approach, which in hindsight was not the right approach. But anyway, I was very curious about it. And then towards the tail end of COVID, I left Goldman and I started a small business, sold that on the side, and then wanted to really go back into finance and decided to now take a stab at crypto, right? Because I thought this is really a very interesting asset class. At that point, it was also much more matured than this was, 2022. So it was much more matured than 2017, 18. I basically, by the way, I held on to all the crypto from 17, 18. We talked about it earlier. There was a crash in 18, but I don't know, it just gave me more conviction in a way. And then went back into it. And I thought, if you want to be in investing and in trading, the asset class you want to be at is probably the one with most information asymmetry, high volatility. Like, everybody talks about that as if that's a bad thing, but I kind of thought that must be a good thing for, at least if you wanted to generate alpha, right? It should be an interesting thing.
Yeah, that's the reason I came into crypto,
right.
The higher vol.
Yeah, exactly. And so then I ended up in crypto, started at a company before Matrixport, right in the week of FTX.
It's a common story we hear.
Yeah, that was very interesting. But and then just went on from there. And actually, the company I was at is a regulated asset manager in Switzerland, and we were acquired last year by Matrixport. Okay. So I came into the Matrixport group through acquisition, and now been with the group for a year. And currently focus on building out our active product suite. So building out active investment funds for traditional investors, for family offices, and so forth, to really be able to invest in the active crypto space. We also have passive products, but really to go into the active space as well, because I think that's kind of the next frontier for traditional investors. And that's what I'm currently focusing on a lot, to build our new active product. So that's what I'm doing right now.
Okay, amazing. All right, we'll talk a little bit more about Matrixport and what some of the structured product stuff that I'd like to quiz you on later. But what a move, huh? 25% off the highs?
Well, they say crypto's like dog years, right? And it certainly felt like that 1 week, how much changed. It was like 1 week was 7 years. I mean, look, we were sat here last week. It
was at the highs,
record highs, and October, and everyone was getting excited.
A lot can happen in a week.
Maybe with hindsight, all the big banks coming in talking about the debasement trade, and Bitcoin was perhaps.
Well, you say that, but gold's continued to go higher.
Yeah, true.
Right, so it's a bit of a different animal now. Suddenly, crypto's decided to act like the ultimate risk asset all of a sudden.
I mean, I think there were clearly, obviously, some idiosyncratic issues that caused that huge.
Yeah, can we walk through those a little bit?
Yeah, I mean, I think there's kind of different kind of stories on this, but I think the main one is some of the stuff that was going on Binance. Okay. So Binance, within some of their collateral pools, I think the weakness, if you like, which was actually being addressed, but was that they were valuing that collateral on their own trading book, so not through external data oracles. And it sounds like they were kind of attacked, if you like, in terms of someone dumping a load of like Athena, which is like a stable coin.
Yeah, I think the founders, we brought the founders on the show before, right?
Yes, exactly, yeah. And basically selling that on the platform. So obviously within their order book, they're just seeing this huge selling. So then the value of that collateral starts to fall quite rapidly.
So it looked like it was depegging.
It looked like it was depegging, but in the outside of that world, it wasn't. But so it triggered a load of liquidations within Binance, and then obviously that started to have ripple effects across other exchanges.
And the alts just got annihilated. Some of the down wicks in the alts were crazy.
Yeah,
I think Sui went to like 50 cents or something.
Yeah, it was mental. I mean, I always say how much actually traded and whatnot around all these things. I mean, I even see
it was around an hour after the close, after the US market closed in the evening.
Yeah,
right. And then I think it was about
so during trading hours, I think Trump came out and said, like, you know, I'm gonna put large tariffs back on China, which was in response to China on the previous day, which kind of went a little bit unnoticed in the market, and basically like kind of increased controls on like rare earth exports and whatnot. So it was in response to that, and then once the market shut, the announcement is 100% tariffs, and then again crypto then gets hit because we're the only tradable market, and then so that alongside the kind of, you know, bespoke issues to Binance with the way they were valuing the collateral, just sort of triggered. Yeah,
you know what's going to really interest me, because a lot of the time we talk about the reason why crypto gets slammed in these illiquid periods of time is because it's the only market that's open. But if we start to move other assets to crypto rails, and all asset markets are open at all the time, 24/7, then is it going to mean that crypto doesn't have these erratic, crazy sell-offs quite as bad?
Yeah, I think
probably should do.
Yeah,
right?
it should cushion it, right? Because you go and hit the assets. Like if you're long Nasdaq or
you sell Nasdaq, you don't sell.
You sell those, or you hedge those out rather than Bitcoin. So it should sort of protect it. I mean, like, look, stepping back, like Bitcoin and like the majors, even Ethereum was like relatively well supported. Relatively,
I mean, the bounce back was quick as well.
Yeah, I mean, back under pressure as we speak. But I think you've had that classic recovery bounce back,
because China are digging their heels in, right, and saying that they're not going to negotiate, and if the US kind of start coming with 100% tariff type stuff.
I mean, look, we had all these conversations in April. I still think it's all noise.
I agree, but the noise can last 2 to 4 weeks.
And it comes at a time when obviously equities pushing record highs, everything was pumping. Bitcoin had just touched a new record high, so everything kind of feels a bit stretched.
There were week longs, right, ready to get flushed out.
Yeah, and it feels like that. Now where from here? Again, I think noise, and already like Trump's sort of made more conciliatory tones around all of this, and I'm sure they're going to sit down around the table and you know, the 1st of November deadline gets pushed back till
December or
whenever, next year, true. And then they're gonna, and then he's gonna have had the great call with Xi, the best call, maybe the best call, like, ever had.
Best phone call
it's the best call. Some say it's the best call. We're gonna kind of go through that whole thing again, and it's all gonna be a nothing. You know, I always bring it back to the macro, like. The underlying macro,
the setup's good
is still good. You know, global rate cutting cycle.
Okay, but question:
liquidity, all these things.
Does this latest flare up make Powell more or less likely to cut rates at the end of October? Because I think that's quite important.
Yeah, I'd say more because
more likely.
Yeah, when you think in September it was a risk management cut, right? Obviously in response to the labour market. I mean, the labour market data's still been soft. The data that we've been able to get. Obviously, we've still got a government shutdown. So when you've got a government shutdown, more global uncertainty around trade wars.
But a tariff But a tariff flare-up should be inflationary, though, no?
Yeah, I mean, we're not kind of seeing it, but the focus right now, and Powell in the past, right, has said that they're willing to look through some of the short-term impacts from inflation. The focus right now is they're seeing the downside risk to the economy essentially pick up, and this would, I'd say, intensify that view.
I'd say the way I'd summarize it is like the economy is so tied to the market, and if like this dents confidence and spooks the market, and the market sells off, that's going to drag economic activity down with it essentially, which makes them more likely to cut to like help that, right, to counter that.
But I think my kind of final point on all of this, I mean, like where you opened the show with, is it time to buy the bottom or buy the dip? These things just have to clear themselves out, right?
But would you buy the dip here? Well, you probably would.
I'm always buying the dip, right? No, but
you bought the dip at 100k, didn't you, on Friday?
I did.
On Twitter.
Yeah, I did. I didn't quite scoop those levels, and my bank also blocked me sending cash to the exchange.
I bought the dip via a call ratio, actually, in options.
Right. Yeah.
And very cheap punt.
Yeah.
Basically.
But yeah, look, the way this plays out, you've had quite a big VAR shock, right? Well, certainly across crypto and less so across sort of traditional markets. So now you just see a general kind of grossing down of risk. The problem, obviously, in crypto, the good thing is that we have this short, sharp liquidation event. Leverage is being completely cleared out. So now you've just got that market just needs to settle itself. So you're probably going to be pretty chopping around quite a bit for the next
saw that in
couple
March.
of weeks.
In March, crypto market had a flush out way before the equity market did.
Yeah.
And then when the equity market went to its lows in April, crypto kind of sold off, but it didn't feel anything like as crazy as what it felt in stocks, right? So maybe it's a similar setup where you get your very fast liquidation in crypto. Stocks maybe still have a little bit of downside to go. Crypto kind of drifts, but it doesn't crash from here.
Yeah.
And then when this finally resolves, you get your year-end rally. But I think we need to give Friedrich a chance. He's been very quiet over there.
Very good listening to you guys.
What's your take on all this madness?
Yeah, I mean, it was very timely. So actually last week, it was beginning of last week, we sent out a piece saying it's time to tactically hedge in crypto. Nice. But it was obviously more timing luck than any skill at that moment in time.
Mm-hmm. But what type of hedges?
At the same, using... Yeah, I mean, we didn't recommend exactly what people should do, but just like, think about the exposure at that point in time, because it seemed like, market was getting, not just crypto, but in general, it seemed like a little frothy at the moment. But honestly, we didn't anticipate Friday. So, but then on the flip side, actually, when all that occurred on Friday, I think it was pretty clear that this is really a technical kind of flush out, a little flash crash, if you will. There's speculation, was it a targeted attack? Because you mentioned earlier the collateral thing with Binance, and I saw an article where I think Binance actually announced a couple of days before or weeks that they would actually want to change it. So by announcing that you're changing something, you're kind of telling people, wait a second,
we've got a vulnerability,
there's an exploit here, or like a vulnerability. Yeah. So in a way, I think there was a technical flush out. So, I think to your question, I would have, I bought the dip over the weekend too, and I think it made sense, right? But we've recovered quite quickly. Like I didn't necessarily think we would recover that fast, to be honest.
We're heading back down, right, as we speak. But I think we're going to chop, right? Like the problem is you suddenly jolted the market in a way where it takes some days or maybe even weeks to find equilibrium again.
Right.
So within that, there is going to be more realized volatility, right? I mean, we had the lowest crypto realized vol for ages. For we were like 20 something.
Yeah.
But it's jumped, right? It's back to like 40, 50 on Bitcoin, which is what we're more used to seeing.
Right.
And Ethereum realizes like 80, 90 now, right? So
but even that, like if you think about Bitcoin, implied vols at 40. That's just, a good day on the high tech stock market, So I think it's not even that crazy anymore, right? Like,
that's
3 years ago, people, it was the highest vol asset class. It was really in the north of 80, 90, 100. Yeah. And now you're at, equity levels.
I was going to ask you about that. Like you're in an interesting vantage point with Matrixport, right? Because you guys are big in structured products in crypto.
Right.
Arguably one of the biggest, right? So what is the supply of vol that's coming from structured products? Is that really what's crushing things? Because I know there's a lot of sort of asset manager fund types that are doing a lot of call overwriting now, and there's the same thing coming from treasury companies as well. Lots of call overwriting, suppressing the vol. What's the deal in the structured product side?
So, I mean, so obviously I don't necessarily sit on the structured products side of things or on the desk there, but even, without specifically talking about Matrixport or the structured products desk, I think what you say is something we observe, right? At Matrixport and more broadly also on the asset management side, there's more and more, people seeking yield. So what's the kind of easiest way to get yield? Let's say if you're Bitcoin, easiest way is call overwriting in a way. So I feel like we see a lot going into that direction. And that's definitely a theme. And I think that will continue for a little bit, right? I just spoke with someone the other day and I remember actually Volmageddon and I don't know if you guys remember Volmageddon in 2018.
I remember it well. I won't say why.
Tell us more. No, and it's a little. I mean, again, not just crypto, even equity market. It's a little reminiscent of that. You see vol spikes and it comes down right away again, and you see this structural, vol selling that's probably going on on the call side and call overwriting and so forth. So we definitely see that, and it's maybe a little bit speculation, but you have so many debts that raised a lot of assets, that have a lot of holdings. And obviously they can never sell assets because people would immediately see that, right? So what could you do? You can start selling some vol around it. So I think that's
I think one saving grace is that it's generally call selling. So it's not like, in Volmageddon, for example, a lot of the selling was in VIX, right? It was VIX driven. And when you sell the VIX on the S&P, you're not just selling calls, you're selling the whole surface, right? So when the vol goes, it blows up in your face spectacularly. At least when you sell calls, market dumps 10%, those calls have evaporated, right? They're gone. So you're not really short vol anymore, right? Yep. So I think that's a saving grace for crypto, for sure.
Do you think, obviously we're talking about the change in vol structure, which obviously with the institutions being involved and the move towards puts, and that more almost traditional equity type sort of structure. Do you think that's cushioned Bitcoin and that in these moves, the fact that there's been the put buying that's been occurring?
Yeah, I mean, funnily enough, like some of the bid for put skew wasn't just put buying. It was also the fact that people who'd overwritten calls and sold calls were rolling them up. Right.
Okay.
So that means they have to buy back the calls that are in the money and then sell fresh ones at higher strikes.
Yeah.
And that's a demand for skew as well. That because you're selling the upside and you're buying the downside, basically.
Yeah.
So it wasn't necessarily that there was loads of put protection that was ready to be monetized and that created a bounce or anything like that. It's just the call overwriting flow is quite active. At rolling itself up to higher strikes as it goes through those strikes, basically.
Yeah. Okay, interesting.
But that is in general, that is a vol suppressor, right? Because as you're going through those strikes, you are selling more and more vol, right?
Yeah.
And now as the market dumps, those calls that you're short have gone to zero. What do? You roll them back down, which is a vol sale as well, basically, right?
How are you looking at on the back of all these moves, the world of vol right now? Like what's where are things and what looks good to you? How are you positioned for where we're at now? So
curves have obviously all flipped to inversion, right? So normally curves are in that contango where short-dated vol is cheaper than medium-dated vol, and then they go upward sloping. Obviously, when you get a big move like this, the front catches a massive bid because everyone scrambles for gamma, which comes from the front, basically, okay? So the front has flipped. Now, it's very hard to call the end of this spat between Trump and China, right? So just going and smashing a load of vol because it's popped is probably not what you want to do. It's a bit dangerous, right? But if you do want to dip your toes in because you think there's been enough of a dip, like you said, you bought the dip last weekend. If you wanted to do it via options because you didn't have like a long-term, view on it, and you just wanted to tactically play a bounce, then I would say call ratios are quite attractive. I did this like in some of my in my account, where you can own like 2-week 115k calls and you sell 2 of the 120k calls, right? So it's 5,000 point wide call ratio. And it costs like next to nothing. It costs like $100.
Yeah.
So $100 to potentially make $5,000 if it ends up going at 120. Now the chances are it's not going to pin exactly at 120, but it's only a 2-week trade. So if in the next week we bounce to somewhere near 120 and the vol gets smacked, which is quite likely it will, then you might be able to flip that for 1,000 and you would have made 10 to 1 on it, something like that, basically, right? So those are little tricks that you can do when the front end pops on a drop and you see that correlation between spot and vol moving away where spot down, vol up. There's a very high likelihood that if you get spot up, you're going to get vol back down again. And you can use those call ratios that are super cheap as a way to kind of buy the dip but spend very little premium. If the market dumps another 20%, you lost $100.
Yeah,
right? You didn't care. So,
but with the leverage upside.
now, obviously, if it rallies too fast, like if we find ourselves at 125 tomorrow because Trump did something good, then you're in a pickle. But if you are a long holder of crypto anyway, you can almost think of it as a call override. You can say through 125, that's the break even on that call ratio. Through 125, okay, I get taken short a little bit of Bitcoin, but I'm long anyway. Right?
Yeah.
And I've recovered from 110 to 125 on my long holdings, basically. Yeah. So it's like a little booster. It's like a little boost that you can give your long without really adding any premium to the table.
Yeah.
Yeah. So that's kind of what I've done. That's the only new trade I've done. And then the hedges, it's a bit early for me to do anything with the hedges. So in the hedge portfolio, we've still got a risk reversal on for November, plenty of time on it, protecting us very nicely. If we were to dump to 100K or below, then I'd seriously think about rolling that thing down, monetizing some of that protection.
Yeah.
And what do you think about kind of the, vol selling, like on the call overriding side? Do you think there's a structural shift towards, people selling a lot of calls far out, and therefore maybe vol on that side being, undervalued? Do you think there's any of that happening?
I think there will be periods of time where it offers very cheap gamma, right? Because the people who are selling those calls are not really vol players. They're just looking for straight premium and yield, right? So they're not looking at it going, are we really going to realize less than 30 in Bitcoin for the next 2 weeks? Like, especially with everything that might be going on at the time, right?
Yep.
So there will be pockets of time where I think you'll get really good value gamma that's coming from those sellers. But right now, vol's back at like 45, 50. So it's kind of fairly priced. But I do think first sign of a rally back towards 120K, it's going to get creamed. Like that short dated vol is probably going to get annihilated pretty fast. Right.
So back to what you're doing at Matrixport. So what are like the kind of core strategies and stuff that are being sort of managed and run there?
Yeah, so on the asset management side, right? I call it the regulated asset management side or the institutional asset management side, where we build kind of investment funds for family offices, pension funds, and so forth. The legacy products are on the really long only exposure because a couple of years ago, at least when the previous company was started, there was no way for traditional investors who did not want to fund a Coinbase account or a Kraken or whatever account. There was no way for them to invest in crypto because they couldn't open those accounts themselves. That was a regulatory limit for them. So we have these legacy products which allow these investors to go into a fund. So this is a fund product where you have segregated, it's bankruptcy remote, you have segregated custody and so forth, super safe, right? So that's a legacy side.
And it's literally just buy and hold.
Buy and hold, right? But then obviously we're building out more and more on the, as I said earlier, the active side. So for example, right now we're building a multi-strat platform where we have really active traders that we want to wrap into this fund vehicle. So, you ultimately have the fund vehicle, but then family offices and so forth, they don't get access to, the vol trader, who's super skilled, or the super skilled CTA trader, or the exchange ARP trader who sits somewhere in the world, and we're going to wrap all those different teams, different pods into one fund, and then investors, family offices and so forth, can invest in that, and thereby get access to kind of true alpha out of the crypto market. So, and really to answer your question, like the types of strategies that we look at there, it's really broad and diverse. And really the goal is to have a broad and diverse base of strategies, right? It goes from vol ARP to exchange ARP, all the way, everything in between, from high frequency to kind of maybe medium frequency. And the idea is to really have a diversified set of strategies that play in all the markets.
And do you track like the relative performance of the different strategies to see what's performing particularly well or not in a certain environment or regime?
Yeah, exactly. That's exactly the idea. We track the different teams, different strategies, right, on how they do in which environment. Ideally, all the strategies that we follow should kind of perform decently well in all environments, and we want to build kind of an all-weather product. But understandably, not every strategy does, and that's okay, right? Like, there's certain strategies that do really well in certain environments and maybe not, neutral in others. And it's great actually to combine those with strategies that have somewhat of an inverse relationship, because you get real good diversification benefits, right? When strategies are not doing all the same,
Yeah.
So that's what we're doing there, to really combine these different types of profiles. And we are actually on the other side, and that's also more my responsibility. Like we already started building kind of models to really figure out what regime we're in, and in which regime what type of strategy can do well. So there are certain regimes where we think, for example, basis funding arbitrage does really well, and we have certain signals that tell us, hey, this is probably a funding rate environment that's pretty decent, that has some legs to it, or not, right? So it's kind of this type of thing that we are more building kind of those models to figure out how to allocate, and then we're letting other trading teams who are really good in their subject matter to do the trading of the underlying strategy then and implement that. So that's really what we're doing. We're trying to combine these things and not run everything internally.
So what kind of liquidity then do these funds have? So like if I'm sat in one of your funds that's, I don't know, running some sort of stat arb type strategies, what have you, but then you come out and say, actually, we're now in this environment where we'd recommend this type of strategy. Like how quickly are people able to come in and out of stuff like that?
Yeah, so the investors in the fund, ultimately they have that's a monthly liquidity, right, kind of cycle. But inside the fund, we can shift assets around fairly quickly, right? Now we don't actually, first iteration of our models tell us that you don't actually have to shift that quickly. Environments don't change that fast. Yeah. In fact, you don't want to, because your turnover gets too big. You shift at the wrong time, and
you get chopped about.
Yeah, you get chopped about, and you don't want that. So really, regimes are typically pretty sticky. So, but to your point, inside the fund, we can shift around fairly flexibly, right? And the setup behind the scenes is pretty flexible and kind of.
So what? How would you categorize the regime we're currently in?
Yeah, I mean, that's a good one. So the current regime, we're, like I said last week when we, sent that report, we said tactically hedging. I think we're in a regime where we do kind of arbitrage strategies, because we think actually they can do well in these types of environments. I saw one strategy, for example, this has nothing to do with Matrixport per se. I saw that, some teams did really well in this depegging moment, for example, or when some assets on some exchanges were depegging and valued differently than in others. So that's actually a good environment for those types of strategies. I think CTAs, on the other hand, kind of trend following models, they struggle, and they've struggled this entire year, and I think they will likely continue to struggle, right? Because in a choppy environment, that's just not necessarily a good environment for them. And we're getting to that point where you get these occasional legs up or down, but in between that, it's typically a little choppy. Yeah. That's not a great environment for CTA. So that's how what our models kind of currently tell us.
And on the vol side, any insights from some of the vol strategies that are being used?
I think honestly everything you just said. We observe, or the vol strategies do the same thing. They actually, most of them do pretty well in this type of environment, because vol gets priced so differently in different kind of as you go through these episodes. So we see some skilled managers in that environment can do pretty well.
Okay.
What we try to avoid is kind of pure systematic in a way that are not RV, that are just strict call overriding every month or something. That's kind of the stuff that you see in ETFs or something. That's the type of strategies that we would not look at the moment, because those don't take advantage of unique situations. They just follow a rule, and sometimes it's a good environment for that rule, and sometimes it isn't. So that's kind of what we observe.
Cool.
Yeah.
Okay. All right. I think it was a good discussion.
Yeah.
Probably leave it there for this week. Yeah.
Yeah. I mean, God, who knows where we're going to be at this time of the week?
Yeah, exactly. I mean, look, I think the message is, as always, this. We don't think that it's over. We definitely think crypto is headed higher. The macro tailwinds are clearly still there, but this little spat is obviously creating a little bit of turbulence. It's going to wash out some weak hands. You want to stick with you want to size yourself well. You don't want to be leveraged in this market. And, if you do know how to use options, then you can add a little bit of exposure with some of the strategies that I've talked about to hopefully get a little bit of a boost if we do bounce. But we'll leave it there for this week. Thanks for watching. Like and subscribe, and we'll catch you back here next week.